Good morning. It's Tuesday, April 29th. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So let's check in on the markets, some of the key drivers for today's session. So equity futures, they were edging higher after car makers get a partial reprieve on tariffs. That's why we saw platinum and palladium both get a boost here yesterday. Now looking at the overnight session here, you got platinum slightly higher here, trading at 995. High of the overnight session, 998, low 991. So quite a tight range there. You have palladium futures edging just a bit lower, down $4.30 at 946. And again, that market in another tight range as well. We saw platinum futures come up to about that $1,000 mark here at one point yesterday before backing off. So we want to look at some of the key levels in that market as well. So imported automobiles, they also will get a reprieve on separate tariffs on aluminum and steel. It's an effort to prevent multiple levies from stacking on top of each other. So the markets, they really are looking for something bigger here in order to push up to that next level on the S&P 500, which would be right around that 5,700 mark being your next level of resistance. Your first critical level of support here today being about 5,500 on the S&P 500. So looking at the markets here, gold, it's consolidating after reaching record highs. The dollar index just remains below that 100 level, although getting a small boost here in the overnight session. You got oil futures also drifted lower. So looking at the earnings, it's going to be a busy day for earnings here. The focus will be on clues for consumer behavior. So they'll start to look at Coca-Cola, Starbucks, UPS, and General Motors. Now, if you look at the U.S. equities, we were up at like 55.73 and 3/4, that being the high on the S&P 500. We backed off and we dipped a little bit in negative territory here after General Motors. They're withdrawing their earnings guidance for 2025, putting a $4 billion share buyback package on hold due to the uncertainty surrounding the tariffs here. So the company, they did post a first quarter profit, $2.78, beating some of the estimates, but the profit outlook going on the rest of the year due to the tariffs on vehicles coming into the U.S. here could question their forward guidance. That's why they suspended it. Now we will have some economic data and we start to get backloaded here for the rest of the week. So we'll have wholesale and retail inventories. We'll have advanced goods trade for the same month here, all due out at 7:30. Home prices at 8. You'll see the jolts. That's what I'm going to start paying attention to. Jolts and also consumer confidence, those coming out at 9 a.m. Central. But the main focus when you get into the economic data here comes later in the week, where you get GDP, PCE tomorrow, then you get April manufacturing on Thursday. That's the ISM manufacturing, and then you get the jobs report on Friday. So looking at the latest on kind of the trade and tariff negotiations, things like that. Not really any new developments here though, but we will have some speakers throughout the week, some key people here at Bissett, Lutnick, things like that. So we want to pay attention to that. Bissett did set a July 4th goal to pass this multi-trillion-dollar tax cut package. So we'll see if that has any kind of boost in the markets. And here we're getting another extension lower on the S&P 500 as of this recording here. So 55.35 on the low of the session, down 17. So we might have had some more earnings here come out, or some more gloom and doom where people are cutting their forward guidance and things like that. Now wait and see. So you look at the gold market here, coming off its lowest level, so down about $25. That's down about 0.75%. High in the overnight session, 33.59.30, low 33.14. So that critical level that I've been looking at is kind of that 32.75 down to about 32.60. That was an old resistance point, and it has shown that it's been a new level of support here, but we just haven't come all the way down and tested it. We came quite close on the last few trading sessions here before getting that big boost and that big move higher here. But the question surrounds on that gold market is really which way is it going to go. I believe that long term we're going to continue to see higher levels here, but we're going to see some short-term volatility when we do have a lot of things here coming out, a lot of uncertainty as far as the global economy and things like that. If they can reduce that safe haven demand and those trade tensions by making some deals, you're probably going to see gold futures take a step back. But the outlook on the global economy, again, it remains quite uncertain. So next driver is really going to be some of this economic data coming out with jobs, inflation, and it may impact the gold market. So gold is up about 25% year to date with the global slowdown expectations, the safe haven demand, and the potential for further gains here if the labor data data starts at this point. So we're going to want to look at that. So we'll get ADP, we'll get JOLTS, and we're going to get some jobs data on Friday. Now, if you look at the exchange traded funds, they did continue to cut their holdings in the gold market here. About 84,000 troy ounces, bringing this year's net purchases to about 6.22 million ounces. Fifth straight day of declines, longest losing streak since November 18th. You look at silver, essentially unchanged, added about 625 ounces, so no real movement there. So we get on the year-to-date percentage change, we get gold at plus 7.5%, another small downtick, and you look at the silver market plus 1.8%, and that's unchanged from yesterday. So we saw that big boost in the industrial metals, the platinum, the palladium. So what I'm continuing to watch here again is the gold-silver ratio. So it's sitting right around 98, just below the 99-to-1 here. So another little downtick, but the level to watch here is the recent lows on April 23rd at 97-to-1. We break below there. And I did this on a Metals Minute a few of them back, where we discussed when we come out of some of this really boiling point of uncertainty, when gold kind of peaks, it's when the market pivots and the global economy pivots, and we come out of this with an industrial kind of revolution again. And we've seen that been the driver of many of these different, when you had COVID, when you had the financial crisis, and that's when silver put on the afterburners and outperformed the gold market. So we want to keep an eye on the 97-to-1 level on that gold-silver ratio, and then we want to keep an eye on some of these outside commodities here, platinum, palladium, and specifically that copper market. Now, some house cleaning on the silver futures. If you are in May silver, you must roll over to that July to avoid any kind of delivery. So look at July on silver, June on gold, July on platinum, June on palladium. So those are the key months to be trading in. So looking at copper, now this is where I think silver is getting its boost in the overnight session. So you see copper just under about 1%, 493.25. That's up 4.35 cents here. And the low of the session, 485, high 496 and some change. And we're trading up near that upper boundary. So you look at some interesting things here, and it's the gauge of strength in China's copper market. It's jumped to its highest level since late 2023. The buyers are really scrambling to secure some supplies. So they look at this thing called the Yangshan Premium. So it's named after a key Shanghai terminal, trade terminal. So it jumped, and this is the premium. It jumped from a low of $35 a ton in late February to about $93 a ton here just yesterday. So this is the premium paid by buyers on top of the exchange prices for imported copper. So the sharp rebound reflects the tightness in the market as the trade tensions persist. So traders in China, they've reported a burst of strong domestic demand and the stockpiles, and we monitor this as well in Shanghai, they plunged to lows in recent weeks here. So that's something we're keeping an eye on. Shifting to some outside markets here, a couple that a lot of clients are involved with. The crude oil futures down about 1.75%, so trading at about 61 bucks here. So that's down $1 on the June contract. So the global market, it's really in kind of this rare territory when you get to the crude oil futures here, where you got some near-term tightness going on and you got a meaningful supply surplus going out. So you look at the Brent crude, that forward slurve. That forward curve is really downward sloping here for the first 9 contracts, and it's kind of setting this historical precedent again. So what you look at is where crude oil's at, and how I monitor this is I watch the spread between on WTI between June, that's the front month, and between December, that's the back month of this year. What is the slope doing? Is it a downward slope? Is it flattening? And how is the spread between the two going? Because if you look at June crude, trading at about 61 bucks, you go to December crude, trading at about $59. Is it widening out because there's more of a supply glut the farther out you go, or is it contracting again? So a lot of things to monitor with that. Another market a lot of clients are involved with is the wheat market, and it really slipped on those easing drought conditions here. So we saw some pressure on it, but we do have a little bit of a snapback. That's only agricultural market really in the green here, up about 2 cents, trading 533 on the July contract. You got corn down 2, you got beans down about 4 3/4 here, and it was really the rains that continued here through the U.S. plains, and it reinforced a large supply forecast with this uncertain demand here with all these kind of tariffs and things going on with the global economy. So the rains, they erased some of those drought conditions in the southern plains, and heavy precipitation across North Texas, Oklahoma really improved that hard red winter wheat conditions here. You saw corn under a little bit of pressure. You get some better weather conditions down in Brazil and Argentina, and it trimmed some of those losses when the EPA announced some emergency fuel waiver. A lot of people talking about natural gas. Check that out on a daily chart. Not a recommendation out to the public. Just an interesting slope upward. It's kind of got that Nike swoosh sign going along it. Could be that power outage that we saw over in Europe here, and the lingering, persisting in that type of development here, where you see people try and secure some of these like LNG, natural gas, things like that. So you got the foreign currencies all making a new low. Dollar index on its high. S&P 500 down about 10. Gold down 25 bucks. Silver up 25 cents. Again, gold-silver ratio now 99-1, and Bitcoin back at 95,600. So it'll be interesting to see which way Bitcoin goes. Is it going to push on up to 100 grand, 102,000, or is it going to stall out here and start to roll over again? So we'll keep an eye on that. Guys, got any questions? Shoot an email, info@Blue Line Futures. Be sure to register for a lot of our research here. We put out a lot of great content. And then remember, futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.